Hi, everybody. Kaylee with Coaching with Kaylee, your go-to CFO for entrepreneurs who really want to better establish a relationship with their money and just be an overall more well-skilled, well-rounded entrepreneur when it comes to understanding their finances. And today we're going to talk about estimated tax payments because it is about that time of year where we really start to look back on what we've accomplished and look forward on what we're expecting to have by the end of the year. Now, estimated tax payments may not seem like very exciting, but it's actually one of the best cash flow tools that we can leverage as entrepreneurs to make sure that we are prepared for the end of the year, rinse and repeat year after year after year. So if you own a business and if your business is profitable, you will owe some sort of estimated tax payments. And it's important to figure out exactly where you'll land because you don't want to overpay your taxes and you don't want to underpay your taxes. You want to pay just the right amount, the Goldilocks, right? Just the right amount of taxes. Now, why it's a great cash flow planning tool? Because we build your businesses to be profitable, right? That is the goal. Yes, if you start a business a couple of years in, you may or may not have a profit, but that's not really the ultimate goal. The ultimate goal is to create a profitable business. And when we have profitable businesses, we need to pay the right amount of taxes when we implement our tax strategies, seeing what's working, what's not working, and seeing how much money that we've made versus how much money that we are keeping. And of course, the more money that we keep, in some cases, we will owe more taxes, which is okay. So I am prepared for another $35,000 tax bill this year after I implement my tax strategies. And why this is a really good tax tool, tax cash flow planning tool for me, because estimated taxes are, the gist of it is pay your taxes as you earn throughout the year, as opposed to paying one lump sum at the end of the year, right? So, and there's an incentive to do this. So if you do not pay your estimated tax payments on time or throughout the year, the IRS may or may not impose a penalty on you, saying, hey, you owe taxes this whole time, you didn't pay us, you have a really big bill. This can be implemented if you owe more than $500 or $1,000, $500 as a corporation, $1,000 as an LLC or sole proprietor. So if you owe more than that, they could implement a penalty to say, hey, you made a lot of money throughout the year, you decided not to pay us at the end of the year, here's your really big tax bill, and here are some fees on top of that. Of course, we always want to eliminate any opportunity to pay fees. We want to eliminate that completely. That is something we would do in our regular business, our regular life, all around, right? So prepaying throughout the entire year to make sure that you land at zero by the time you file your taxes or as close as possible, right? So the reason why it's a cash flow planning tool is because if you end up owing, let's say $35,000 by March or April 15th, when you file your taxes, that could make a big dent in your bank account, right? So it's a lot easier to plan for a tax bill ahead of time. And then also to estimate what you might owe around Q4 of the year so that you can implement tax strategies in order to bring that tax bill down or prepare for paying for it in full, right? So estimated tax payments is powerful because one, it helps you kind of check in on your business strategy throughout the year and implement tax strategies to make sure that you are having the most fulfilling year. It's profitable, but you're keeping more of the money that you make, and you're planning your income alongside your taxes so that you don't have a big surprise bill at the end of the year that you don't have the money for, or that you don't have a big not surprise bill that you don't have the money for. So making sure that you have everything in order. Now, what I love, the little strategies that I implement with my clients and what I love to do for myself personally is each month I'll do my calculations and I'll put a certain percentage, let's say 15% across the board, 15% of your net profit into a savings account. And then every 3 months, you pay your estimated tax payments. That's a really good and easy way for you to plan for your estimated tax payments without feeling overwhelming. Because I know the first couple of years in my business, when I turned a profit, I was living off of those profits and didn't quite plan for my taxes in a proactive way. So I ended up owing money and then not having the money to pay the money that I owed because I was living off of my profits entirely. So proactive cash flow planning is extremely important, especially when it comes to taxes. Taxes is like right up there, right underneath or right alongside paying you. We plan for taxes as well. So start to rethink about estimated tax payments as like this annoying bill you have to pay or an annoying amount you have to pay. So like really organizing and being proactive about, hey, what's going on in my business? Am I implementing the right strategies? Am I hitting my target goals and priorities? And am I planning accordingly for the success? So making sure that you're planning throughout the year. If you have any specific questions about estimated tax payments, I have a fabulous blog on this, or just ask me and I'll be happy to help. Love, light, and money, honey.